Hey everyone, today I want to talk about a topic that impacts all of us. A lot of us work day and night so we can reach this goal where we can make choices and decisions unconditionally without having to worry about the money aspect of things. I'm talking, of course, about financial freedom. So, what is financial freedom? The definition I usually abide by is that financial freedom is a monetary number, a number through which you can live the life of your choice for the remainder of your life. This number basically buys you the freedom to do anything you want, be it pursuing new career opportunities or new hobbies, or to simply retire on a beach. The essence of this number is that over a period of time, through one or more income sources, you accumulate enough wealth that it can feed your cash flow requirements for the remainder of your life. So we know that we need to accumulate a certain amount of money, and if we invest this money in a relatively safe financial instrument like a government bond or a GIC, then the principal amount and the returns or interest on that amount should be able to feed our cash flow requirements on a monthly basis for the remainder of our life or for as long as we plan to. Example here would be, consider yourself wanting to retire at the age of 45. And also consider that you would need a monthly cash flow of about $4,000 to live happily at that point in time. Let's also consider a life expectancy of another 45 years, so the age of 90. Now, if we do some rough calculations here, so essentially $4,000 multiplied by 12 multiplied by 45 years would essentially come up with 2.2 million. This is an approximate number because we've not factored in inflation, but 2.2 million gives you a sense of how much money you would withdraw over a 45-year period in order to live happily. I created this Excel to help everyone calculate this number. So let's try and calculate this number. Would require some assumptions. So let's get started. Now, in the Excel, all the fields which are marked blue can be modified. The idea is that only by inputting these fields can a tentative number be generated which can act as a North Star. Tab is monthly cash flow requirements. This is the number you think you would need per month to maintain your standard of life. From our earlier example, we could assume it to be about $4,000. Next we have is the rate of inflation. Now this is something everyone would be quite familiar with given the current economic situation. This is the rate at which things become more expensive on a year-on-year basis. You could buy for $100 last year require more than $100 this year, don't they? To input here, you can either search for your country's stable rate of inflation. For countries like Canada, US, this might be around 2%, or you can take the average rate for the last 10 years of your country. All right, next we have is the risk-free rate. So remember, we talked about investing the money you need to have at the age of 45 to be financially free. Let's assume you have this money. Most probably, you would want to invest it in a security where your principal amount is not at risk, like it is in the stock markets. So the rate of return you get in a country without any risk associated with it is known as the risk-free rate. This in US is the government's 10-year treasury bill rate, which is a government bond. Risk-free nature exists because the investment on this bond is basically guaranteed by the US government. It would never default, or that's the hope. So this rate should be the rate of return on a similar instrument in most countries, which is essentially considered to be risk-free. We have the year on which you would like to be financially free and the number of years, which is your time horizon. Entering all these numbers gives you this figure here, which is about $2.2 million. Now, let's briefly look at how we got this number. What we see here is an annual cash flow requirement calculated using a few things. Your expected monthly cash flow requirement, the rate of inflation you had entered. Monthly cash flow was used to calculate a year's cash flow requirement for the first year, and then this amount grows on a yearly basis based on the rate of inflation. Then we have a present value column, which is simply taking all of these future cash flow requirements and converting them to today's dollars. We saw earlier that today's dollars and tomorrow's dollars are different due to inflation. Now in this case, we see that about $2.2 million are required by 2024 to be financially free. Now obviously, this amount does not account for any real assets. For example, if you plan to build a real estate portfolio and expect to have a rental income from that property, then subtract this rental income from your total expected cash flow requirements. If you're unsure of how to arrive at this final number on your own, then feel free to use this Excel. The link is in the description. Now we have a number. How do we get to this number? There are 4 key principles of personal finance that can help you on your way to achieving financial freedom. Number 1, manage your cash inflow. Your income should be greater than your expenses. If that is not the case, then cut any and all expenses you can. If you cannot cut any expenses, then simply upskill and make more money. This will take time. Use your weekends in upskilling yourself. The goal is simple: to have a surplus of cash every month. Second point is manage your cash outflows. So here, let's first talk about expenses. Track your expenses on a weekly manner. Create categories like mortgage, rent, or groceries, etc. Find the maximum amount of money that you can spend on each of these and track them on a weekly basis. Input numbers on a weekly basis. This is not something you will ever stop doing. Make it a part of your life. Sonali explains the concept of expense tracking in detail in this video and provides an Excel tool to help you record and manage your expenses. Please feel free to use it. Link is in the description. Next in managing cash outflow is taxes. For taxes, all I would say is keep an eye out on the impact of tax on your investments in case you rebalance your portfolio frequently. Taxes reduce your return on investment significantly. Keep an eye out on dividends and how they are taxed. Leverage tax-saving instruments like RRSP and TFSA. Third point to keep in mind in your journey to achieve financial freedom is manage your investments. Find ways to grow your investment at a rate of growth which is much higher than the rate of inflation. Now, this could be through passive index investing, active investing, trading, or growing a real assets portfolio. The key is inflation-adjusted investments. I will talk about them in detail in future videos. Fourth point in your journey to achieve financial freedom is managing your net worth. Managing net worth means finding your financial net worth and keeping a track of it. We can do this through financial statements. Financial statement depicts the financial health of a company. It's good to create something similar but much less complicated for us. Create an Excel where you simply create an assets column where you list down all your assets and a liabilities column where you list down all your liabilities. Your assets minus liabilities is your net worth. This is the number we will track on a month-on-month basis. There are some obvious nuances here. For example, if you buy a car on loan, then how would you track it? A car is a depreciating asset and it depreciates on a month-on-month basis. So how would you be tracking that? So in case you'd like me to create an Excel which factors all of that in and share that tool with you, then do let me know. So that's our 4-step plan. In case you have some time on hand, then I would recommend that you read or listen to the summary of this book called Richest Man in Babylon. It's a great book and one of the best personal finance books that's ever been written. Principles of personal finance are only a few, and a lot of it is just patience. Hope you found this video helpful. Thank you.